Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be talking about the bank stocks, in particular some of my favorites in Citigroup, Wells Fargo, JPMorgan Chase, and Bank of America. So those are the big four in terms of the broader market. You've also got Goldman Sachs and Morgan Stanley up there. However, the four that are over the 1.5 trillion in total assets are the Citigroups, Bank of America, Wells Fargo, and JPMorgan Chase. You can see some of that information here. You can also see USBs kind of added to that grouping, although we're again just going to highlight these four in particular and kind of how I think that you can trade them. I would highlight just here on my screen just some of the 52-week changes. You can see who's weathering the storm a little bit better than their peers in terms of what we're looking at in terms of the 52-week change. Again, most of that, if we look at the 1 year mark, is still not exactly great performance, in particular compared to their tech counterparts in terms of industry. So all of these banks are in the financials industry, and we're going to be looking at them today. So there's two different ways that I want to play the news that came out this past Friday, which, as you can see on the Why Is It Moving, that they are loosening share buyback restrictions. So what that means is that as you are looking at the shares outstanding, which on this particular institution for Citigroup, there are 2.1 billion shares outstanding, or you have someone like a JPMorgan who has even more than that in terms of shares outstanding, and they announced that they are going to be buying back 30 billion shares. And this is something that we saw a lot of the growth over the past 5 years or so was coming when these banks would do these buybacks over the course of, in particular, 27 through 2018 and all through 2019. Some of this growth was really coming from when these banks would buy back their shares. So if you kind of do the math backwards on that, if you've got 2.1 billion shares outstanding and you buy back half a billion of that, or not even half a billion, let's say 0.1 billion, 100 million shares, then that means that the shares that are currently out there are all now worth more. So that's kind of some of the target that we're going to be looking at, and I'm looking to play this two different ways. So first and foremost, if we go back to the different peer comparison, if you said, Zach, which company do I need to be putting my money in to hold long term, I would say if you're looking to make a share play, go Bank of America. Bank of America is my favorite because they offer a nice solid dividend. You can see that due to the increase that we've seen over the past few months, that it has gone down. I personally like it under 3%, over 3% in the total dividend. I don't know if we're going to see that pricing anytime in the near future, but it's a nice solid dividend. So that is more my growth play. Bank of America is very well known for increasing their stock price by buying their stock back. As of right now, only JPMorgan Chase has said that they are going to be buying stock back. I anticipate Bank of America and Citigroup to follow. So that's what I really like about those. However, for an options play, I'm actually looking at Citigroup. So currently, or today, I did purchase a $75 February 19th call option, and that's something that I want to then sell into a spread off some of the excitement, although I need the broader market to increase as well. What you can see just over the past 5 days, that we had this big spike, and they actually had pretty solid days today and some nice solid gains. So I am all for that. I think that that's something that's going to continue should the broader market pick up and kind of build up steam. I really like that approach. So the reason I like Citigroup is that they have new management this calendar year, or rather last calendar year, and they are starting to turn things around. They're doing better. Overall, they have a really nice dividend of right now it's at 3.45%, although I think that's going to be a little bit lower because it hasn't updated for the spike in the share price. But this adds a lot of optimism going forward for some of the capabilities of these stocks because, again, they have strong dividends, they have strong growth potential, not necessarily from the interest side of things, but in particular from a overall what is their optimism going forward, not in interest revenue, but in additional loan volume. A lot of these banks have a lot of money on their books in terms of deposits, and because of that, they're going to be able to go out and issue more loans. So due to the stimulus set to be voted on tonight and may already have announced by the time that this video is published, a lot of these banks are not expecting a lot of losses going forward, and they haven't seen a lot of losses this year, which is originally why bank stocks cratered. So I think that there's a lot of opportunity here, because if you just look at some of the charts here and we just say, hey, where are we standing from? Let's just look at a 52-week high or the 1 year mark. Then what you can actually see is that we are well off of that high of $80 a share. And a lot of the financial stocks are actually doing really well comparatively to where they were a year ago today, including Bank of America, JPMorgan. So that being the case, I think that right now, if we can break out over the $62 threshold, then we really have a nice push where we can make it up to kind of the $70 mark. And let me just show you the optimism that I am going to be looking at by going to the potential spread. So as you can see, I am already down relatively large on my call option that you see here. Admittedly, it only cost me right at $57, and this is one that I think if you see another green spike that you saw at the end of the day or even at the start of today, this will go positive. It was positive and negative today, so not something I'm worried about, because this stock is experiencing volatility which is not used to. So you can see there's a lot of potential for gain right here, although what I'm actually looking to do is, as soon as this goes positive by $10 to $15, I'm actually looking to sell the February 19th call, and I'm looking to do that farther out of the money at that $80 option. So right now, what this would look like on this particular trade right here is it would provide me with the potential to profit $463 if the share price did crest $80 at expiration. However, what I'm more likely to see is if we actually spike this up by, like I said, another $10 or so, then my total profit potential is $478 in terms of it expires over $80 a share, or my total loss is only $22, and I really like that option. So that's why I'm playing the options on Citigroup, because I really think it has the potential to get up over $70, $75 in the next 3 months or 2.5 months. So I'm playing the options on Citigroup, buying the shares on Bank of America, and excited about what we have going forward. So let me know in the comments below on your thoughts on the share buybacks and what the banks are going to do, and if you have any suggestions on what I should be looking at next. Thanks. Talk to you later.